Roar!
Jesus Christ, Aaron, fine! Fuck! Alright!
Roar! Ah!
Today I want to talk about Bitcoin Cash and how the situation is potentially a lot worse than I thought it was. We're going to talk about Bitmain and the IPO, initial public offering, that they've announced. But I'm not trying to state Bitcoin is better in this video. I've talked about my opinions about that. I'm not going to get into the scaling debate. I'm not going to talk about which one you should invest in at all. You can go with both, or I don't care. Recently, I talked about the scariest thing in cryptocurrency, and it was this dude. No, not him. It's the trustee and lawyer for Mt. Gox, Nobuaki Kobayashi. The remaining Bitcoins are 137,891, with the same amount in Bitcoin Cash too. But that's nothing, potentially, compared to the situation over at Bitmain and Bitcoin Cash right now. Now, thankfully, this doesn't look like it's going to affect Bitcoin all too much, but the implications of this are as yet unseen. We don't know. Maybe it will. Let me know your thoughts. But here is where the concerns start. Why is Bitmain running an IPO, initial public offering, where you can buy shares in the company before they go publicly listed on stock exchanges, just like an ICO? Now you know where that comes from if you didn't before. But why are they selling portions of their company? We don't know. We can't say. It could be to fundraise on future projects, or it could be because they're trying to bail out of a bad financial situation. We honestly don't know. It's just speculation at this point. Some of the speculation is quite negative because it seems like Bitmain has made errors, at least short-term, errors that have cost them hundreds of millions of dollars of potential value in trades. So let's explore this for a moment. Here is some promotional material for potential investors into the IPO. On the left-hand side, you have total holdings for their cryptocurrencies inventory, you can call it. Now, we're going to assume that these are honest and they've been totally transparent here. A big assumption, but we'll just do that. Now, from the 31st of March of this year, we can see that their Bitcoin holdings were around 22,082. But for Bitcoin Cash, BCC, over 1 million tokens. 1 million. That is a crazy amount of coins. Bonkers. Let me put into perspective how many coins that is. You could crash the price of Bitcoin Cash on any exchange you want. Any single exchange, bring it down to zero almost. A lot of buy orders would come in, but yeah, theoretically, you could crash the entire order book with that many coins. It's a silly amount. Now, how did this happen? How on earth did they get so many coins? There's a few reasons, but before we get into them, just something to note. Bitmain especially would prefer that we use Bitcoin Cash tokens. One of the reasons why they're trying to support it by hoarding it, taking off that supply from the markets, is because of a patent pending ASIC boost advantage that they have for their miners. This means that they have theoretically around a 30% advantage with the same hardware as someone else because they have something called ASIC boost. Now, SegWit removes this advantage. Transactions that are mined, or SegWit transactions that are mined, cannot benefit from ASIC boost. So one of the reasons that they support Bitcoin Cash's network is that it doesn't have SegWit, unlike Bitcoin's network. A second reason is that they are worried about second layer solutions like the Lightning Network potentially reducing their profits because most of the transaction fees would go to the companies supporting the layer 2 solutions and not the miners. So this is more of a miner-friendly token. Now, which one you support is entirely up to you. I'm not trying to say that any one is better than the other. In my mind, both of them have issues. So yeah, I don't know. But the important thing is that the Chinese miners are financially incentivized to see the success of Bitcoin Cash, and that's all we need to know for now, I suppose. Anyhow, how they got so many tokens, it can be broken down into 4 things. Number 1, on August 1st, when the snapshot of the Bitcoin blockchain took place, anyone that held Bitcoin got Bitcoin Cash for free. It was forked. It was given to them. And we know that Bitmain is a very financially successful company. They had theoretically 75,000 around that Bitcoin tokens at the time of the fork, so they would have gotten quite a lot of Bitcoin Cash tokens as well. That was very nice of them to give us free money with that fork, wasn't it? Yeah, not so much if you happen to buy, apparently. So according to this, someone calculated it. If you were to have bought July last year when Bitcoin Cash was $500 and Bitcoin was $2,750, at the end of the year, you'd have a lot more money holding Bitcoin than Bitcoin Cash. This is slightly misleading. There are some definite time periods where if you bought Bitcoin Cash instead of Bitcoin, you would have had a lot greater gains. But just playing the HODL game, seems like Bitcoin was a far better choice. This is important, and I'll address this again later. Number 2 reason is that they haven't really been selling any Bitcoin Cash they've been mining. They've been eating enormous electricity costs doing this, but clearly they saw some value in not selling, in not harming the markets in any way possible. Number 3 is abuse of the emergency difficulty adjustment, or EDA, that was unique to Bitcoin Cash. It's been removed now, but it did used to have it. This has caused wild swings in the difficulty of mining. What I mean by that is that occasionally the difficulty would be quite high, blocks would be coming very slowly. During this time, Bitmain would transfer some of its hash power back to Bitcoin, mine that, wait for the difficulty to readjust, and it did drastically. It would come way down. Then Bitmain would transfer a lot of hash power over to Bitcoin Cash, and they would be churning out blocks like crazy. This is the reason why, let me show you, Bitcoin Cash has around 90 million more tokens than Bitcoin, or 83 million more tokens. Now, foul play or not, incompetent developers or not, that's just the reality of the situation. The number 4 reason why Bitmain have so many tokens is a speculative one, but considering that their Bitcoin holdings have been dwindling while their Bitcoin Cash holdings have been increasing, it leads you to think that, yeah, they've been making some trades from Bitcoin into Bitcoin Cash. Have they been supporting USD valuations of Bitcoin Cash by setting up buy walls on exchanges? No one knows for sure except the exchanges in question. It's a likely possibility. But these records only go as far back as March of this year. Has anything significant happened since that time till now? Well, yeah, Bitcoin Cash has halved in value because of the prolonged bear market. This has seemingly put the financial squeeze on Bitmain. Not only that, but any attempts that they've made to update their hardware since the Antminer S9 was released back in 2016 seemingly have all ended in failures, and this has been giving some market dominance away to other mining companies. So since then, they've reduced their holdings by 25% and are now selling a portion of all Bitcoin Cash that they are mining onto the markets. This is creating more downward pressure on the coin than it's seen before in the past. Still, they face the problem of having such a huge amount of tokens that there's no way that there's enough depth to the markets to be able to shift this without causing some huge damage to its USD price. This is a coin that they want to succeed after all. They don't want to harm its USD valuation in particular. And another problem they face is that they cannot just switch over their hash power completely from Bitcoin Cash all to Bitcoin, which is more profitable, because then the Bitcoin Cash network would be more susceptible to 51% attacks. This is where some foul players can create coins for themselves, start dumping it onto the exchanges, potentially before the exchanges realize that the attack is happening, and then shut off their wallets. They could cause some real damage with one of these attacks, potentially irrevocably, so they want to avoid that. In summation, the situation could be pretty bad. If they are in a bad financial situation, this leads to a couple eventualities for them to get out. First of all, they might need to just hope and pray that the bear market is going to go into a reversal soon, because that would help. Or they need to sell a whole bunch of shares in their IPO, which may be unlikely in the bear market, might not. They might make loads of money. Or they need to risk dumping the Bitcoin Cash holdings to return to profitability. Another potential threat as well is what happens when the shareholders demand that they increase profitability by asking Bitmain to stop diverting hash power to Bitcoin Cash, or when they ask them to liquidate some of their ridiculous holdings in Bitcoin Cash, which wouldn't be that unrealistic of a demand to make by shareholders. Personally though, I think it's more likely that Bitmain is doing just fine and these fears about their financial situation could just be totally unwarranted. Or even if they're not, maybe this IPO is exactly what they need to do to pull themselves out of this situation without having to dump their Bitcoin Cash. The main issue is, and why I think it deserves a video, is that this is a realistic possibility. The fact that it's a possibility is bad. It shows why centralization, especially mining centralization, is a bad thing. Now, links to everything I've talked about is below, and where I've speculated, I've hopefully made clear that I'm speculating. I don't mean to spread any FUD. I just want to share facts and concerns which may or may not be warranted. Bitcoin Cash could go under, never to rise again. Or, due to some fantastic marketing, it could replace Bitcoin as the #1 cryptocurrency, or it could stay just where it is. I have no idea. Please do your own research. I don't want to be held responsible for your financial decisions at all. Let me know what you think about the situation below. Full disclosure, I don't really care about the scaling debate. I don't want to really talk about it anymore. I do own some Bitcoin Cash, not a lot, so I'm not really concerned about this. And what effect this is going to have on all of cryptocurrency should this happen. If it's going to be a good thing for Bitcoin, if it's going to be a bad thing, I have no idea. It's really speculative. Let me know your thoughts. Oh boy. Anyway, let's move on to the markets. I talked quite a lot there. Ethereum down 10%. Damn, it's falling fast. This really sucks. So against all odds, Bitcoin has, for now, defended its position above 6,000. Now, whether or not this is going to be tested again soon, I don't know. But one of the reasons people are attributing Bitcoin to be over 6,000 right now is due to a pump in Tether where 50 million new tokens were created. Now, it doesn't help to look at the price. You look at the market cap for Tether. It doesn't really help. Anyway, 50 million were printed. You might think that that's not enough to cause any pump of any significance in the markets, but I would tell you, my non-financial advice is 50 million actually can go a long way, especially when you realize the market cap is actually much smaller than it appears to be. Now, whether or not this is manipulation, whether or not those Tether coins were fabricated out of nothing, we don't know. Only the issuers of Tether can tell us. It does look suspicious. Where did 50 million come from, especially during this bear market? But yeah, I'm not going to say it's for sure manipulation. Just looks pretty obvious. Quick shout out to CoinGecko. If you're ever looking for a token that's not on CoinMarketCap because it's recently out of ICO, it might be on here. I found this to be quite useful lately. It's got a few funny things on the sides that you might not see on CoinMarketCap, like the all-time high price and percentage drop since the all-time high. Always fun to look at. Now, quite a while ago, I did a review for ABCC Exchange, and they've got their own tokens, and generally exchange tokens do quite well. So I thought we'd very quickly have an update on their progress. They did quite well initially. Coin started trading at around 50 cents, and it jumped to an all-time high of $3.65. Quite a bit down since then, as is almost everything else. But they did release their mobile app 2 weeks ago, and the user experience is quite good. There are links down below if you want to check that out. The token has an interesting value proposition, as 80% of all trading fees are redistributed to token holders. So again, if the exchange does well, if the platform does well, then theoretically so will this coin. Today's video is sponsored by Ivy. We're going to take a deep look into this coin. It has some similarities with Ripple. It differs in some places. We're going to do a deep dive into it. So let's take a closer look. So obviously, it's a straight up cryptocurrency. What it's aiming for specifically is adoption by businesses and banks. Now there's Ripple. We have heard of Ripple. We know the value proposition. So currently there's estimated to be 10 trillion USD that's sent every single day around the world. And the idea is that if banks were to use a cryptocurrency, they'd actually save a lot of money rather than doing it with the current fiat way. Now, there's a few things that a cryptocurrency needs to adhere to get picked up easily by banks or big businesses, and that's critical data points like know your customer rules or meeting anti-money laundering regulatory needs, and that's what Ivy is going to aim to do. So this solution can provide banks with potentially new revenue streams and for the ability for people to on and off ramp crypto into banks. They see the first step to doing this is the recently announced Ivy Pay. This is an app which will allow consumers in Australia to change cryptocurrencies into real dollars. This is aiming to get released in 2019, with other countries looking to be supported soon after. Ivy sees the consumer product as the first step into offering solutions for banks and other financial institutions. So obviously it's a monumentous task ahead of them and actually getting picked up by banks globally. They have, however, already signed with a multi-billion-dollar bank and is apparently in final stage talks with several other banks. They're also being acquired by an Australian stock exchange, and their CEO has experience with both blockchain and banking. The token economics are as follows. You get a fee discount for paying in Ivy, and all tokens collected will be subject to a burn. The idea being to gradually lower the overall token supply. Interestingly, this project is funded and running without starting an ICO. They purely sold out in private sales which says something about the demand for these tokens. They raised over 17 million USD. It'd be nice now to see that money be some of it be put into marketing to build some hype now. That's what they need. The followings online aren't there yet. Maybe that's about to change. I'm not sure. Definitely an interesting project. It's just about building awareness now for their project. And that's it for today. It was kind of a bit longer than usual, this video. Lots of interesting things to cover, I felt. Let me know what you think about this Bitmain IPO. Let me know what you think about Ivy. There are links to their social communities down below, should you want to check that out. Thank you for watching, and I'll see you again soon.